Bloomberg Audio Studios. Podcasts, radio, news.
The single best idea. A great set of conversations today. Just wonderful, wonderful guests here. Getting towards, I guess, an end to a government shutdown. Joe Matthew driving that beast into the afternoon and no doubt into the evening. Major shout out Nathan Dean with terrific perspective in Washington from Bloomberg government assisting mightily this morning. We did a lot on bonds. It was sort of a bond day, fixed income day at Bloomberg Surveillance. Andrew Cizorowski at Eaton Vance Morgan Stanley was absolutely brilliant on the uniqueness of this market. With decades of experience, Russell Brownback at BlackRock followed on and really put in perspective where we are in clipping coupons. Here, Russ Brownback.
A very large catalyst this coming year is going to be as that policy rate comes down. We think the Fed will deliver what's priced into markets, which is down close to neutral by the third or fourth quarter of next year. And then you start to think about those trillions of dollars sitting in cash today. And cash has been a very high Sharpe ratio allocation heretofore for the last 6 or 8 quarters. I think that money will begin to migrate into some longer tenors as some of those investors look to lock in this opportunity set. And we don't see a lot of overall duration beta move in this coming year. So again, it's going to be about harvesting that income.
That's a window into the fixed income world with Russ Brownback. Just can't say enough about the acuity here of some of our fixed income guests. Yeah, Joe Weisenthal and Tracy Alloway in to celebrate 10 years of Odd Lots today. We're talking about windows into global Wall Street for people that aren't global Wall Street. Let me attempt that right now. Jay Hatfield was in today with infrastructure assets, and he claimed from 7,000 Standard & Poor's 500 out to 7,700 Standard & Poor's 500. That's a Dow equivalent of over 53,000. He's looking out there somewhere to go from 48,000 to 53,000 on the Dow Jones Industrial Average, just for cocktail conversation. So what do you do with that? The word the pros use is extrapolation. Let me explain how you do it on the Bloomberg terminal. You take a given series, the Dow. You look at a given trend that you have. I took the trend from the autumn of 2022, which I call the Yardeni-Ankampora low. You got a bull market trend up and to the right. You take that and you extrapolate that out. And you can do all this on the Bloomberg terminal. Then you take from here and now Jay Hatfield's call of 77 on the SPX. Is that a outrageous extrapolation? Is that responsible? And what's amazing is out 12 months, if we were to get to SPX 7,700, it's beneath that regression extrapolation. It is a responsible call and harkens back to the fundamental analysis of someone like Ed Yardeni or Brian Belsky at Humanist, John Stolfus with us at Oppenheimer the other day. On this bull market, Jay Hatfield.
We are very constructive. A little bit more next year than this year. We have a 7,000 target this year. You notice we kind of faded off that when we got to 69.40. And we have drawn a distinction because we've been asked probably 100 times whether we're in a tech bubble, and we say, no, we're definitely not. But that doesn't mean we're not pretty fully valued on tech. We see the Mag 8 is right around fair value, except for Tesla, which is massively overvalued. And so you're seeing that kind of behavior in the market where kind of every other day people fade the tech rally and we get a rotation, and like today we're actually rallying in tech. So more churning than straight up. But we have a 7,700 target for next year.
Absolutely unbelievable. I don't know anyone out there with a published 7,700 target. And again, the extrapolation of that call by Jay Hatfield is beneath the trend extrapolation back to October of 2022. It's amazing what the Bloomberg terminal can do. On your podcast, on Apple, on Spotify, on YouTube podcasts, it's single best idea.